Good afternoon. Welcome to another session of the Rousseau Report. I'm your host, Dennis Rousseau. It's April 2024. What's happening in our business jet markets? As always, let's first take a peek at the economic fundamentals. Have they improved? Our national debt stood at $33.7 trillion in December of 23. 4 months later, we're at $34.5 trillion. Now, how do you spend $1 trillion in 4 months? And by the way, we spend $2.4 billion per day or $700 billion per year servicing the interest on that debt, and that's your tax dollars. Our groceries continue to skyrocket. Eggs are up 63%, bread 34%, sugar 53%, and gas at the pump was up an average 18%. Existing home sales fell to the lowest level in 15 years in December and continue a downward trend. And if you can't afford to buy a home, you're certainly not going to spend money on an RV, where sales are getting slammed. And the OEMs, such as Bass Pro and Mercury Marine, are laying off workers in response to soft demand relating to the economic climate. Last week, the Commerce Department reported U.S. GDP in Q1 rose just 1.6%, while analysts predicted 2.4%, which suggests another recession is here or closely on its way. Now let's revisit something. A recession is defined as 2 consecutive quarters of growth below 2%. Well, in 2022, as you can see here, we had 2 quarters below 2%, but the National Bureau of Economic Research, or NBER, who's responsible for calling recessions, didn't announce one, so therefore it didn't happen. We know economic growth is slowing, and inflationary pressures are persisting. Economists continue to worry about recessions, but also stagflation, which is a combination of slow growth, high unemployment, and rising consumer prices. So as not to just pick on the US, the UK, Germany, and Japan are currently in a recession. Yellen said just last week, the US economy continues to perform very, very well. I think she said that 6 months ago too. The administration went on to state we've gone from creating 60,000 jobs per month to 60,000 every 3 days since 2021. That's a lie. Employment growth has gone to mostly illegal immigrants, up from 2 million in 2022 to 2.9 million in 23. Last year at this time, we showed layoffs comprising over 500 workers, January through end of February, then again March through May. And this is the exact data we presented. Now, of course, things have been improving, right? Wrong. This depicts the first 4 months of 24, and the companies comprise consumer goods, healthcare, banks, pharma, shipping, private equity. Nearly every segment is being affected. Before we move into business jet markets, where I'm going to show you some great market dynamics, let me touch upon a couple of data points that further support a deteriorating economy, which greatly affects business jet values and sales. Commercial real estate continues to get crushed, with high-rise buildings selling, dig this, for 30 cents on the dollar. There were 634 commercial foreclosures in January of this year, a 97% increase over same time last year. More than $38 billion of U.S. CRE is facing default or foreclosure, which is the highest since the 2008 financial crisis. In Q4 23, we passed the $1 trillion mark for credit card debt, which continues to climb, just as it did during the downturn in 08. Now let's turn to business jets. But first, congratulations to Gulfstream for obtaining FAA certification for the G700 on March 29th. The full fly-by-wire aircraft features a cabin altitude of 2,840 feet at 41,000 feet. A purpose-built 4-zone cabin, a range of 7,700 nautical miles at 0.85 Mach, or 6,600 nautical miles at 0.90. Now think about that. You're going from New York to Tokyo nonstop at 9/10 the speed of sound. And the list just goes on. Check it out. It's a pretty amazing aircraft, and AircraftPost is tracking it. Speaking of AircraftPost, they just released market statistics for year-over-year Q1 results. And what's interesting are the similarities of aircraft added to the market in Q1 of 2023 and Q1 24, as well as transactions for the same period. But more so, look at a normal market in 2020, prior to the price run-up in 22. Could this suggest, other than pricing now, which we'll circle back to in a minute, that our markets are correcting? Could be. However, let's expand the timeline. What do normal markets look like? On average, 65% of the aircraft on the market will transact over any given point in time. As we look at this corollary, and specifically the data points in Q1 24, I'd suggest we're moving in the direction of normalcy. Again, with the exception of pricing, which seems to be one of the biggest indicators of a correction. Now, I'm going to ask you to keep Q1 aircraft added to the market in 2022 through 2024 in your sight picture. In the super mid-size markets, inventory is clearly on the rise. Now, in the case of the G200, where there are 35 aircraft on the market, after we deduct the 12 that have been written off, this represents 15% of the available fleet. Why? This could be due to Collins no longer supporting the ProLine 4 avionics, which also holds true for the Lear 60, Falcon 2000 Classic, and the Challenger 604. Let's now look at some legacy long-range models, aircraft such as the Falcon 900 and G4 that are broaching 40 years of age. The latter ended its production run with 212 aircraft in service. However, 50 have been written off. Of the 19 aircraft on the market, 14 have north of 10,000 hours total time with no engine program. Imagine the maintenance bills. The Falcon 900 is no different. 14 of the 17 on the market are over 10,000 hours total time. The G4 SP that shares the fuselage, empennage, engines, and avionics with the 4 is showing 39 aircraft or 13% of the fleet on the market. Next category, the legacy G5 and Global Express are facing a similar dilemma, with technologically obsolescent avionics and increased maintenance costs that would choke a horse. So what happens when aircraft are faced with these circumstances? Well, they reach end of life and are subsequently parted out, piece by piece. And this is not the anomaly. I get emails similar to these every week. Let's use a current generation business jet model, the very popular Gulfstream G450, and see if there's a similar corollary. Let's first look at the current market over the last 4 years. It tells quite a story. Market inventory went from 20 available aircraft in 2021 to a range of roughly 5 to 10 during the pandemic. Then everyone had to have an airplane, so inventory settled into the single digits and prices were run up. End of story. Or is it? Today, there are 30 available G450s on the market, representing 9% of the fleet, with an average market time of 180 days on the market. Let's expand our view and look at current market for the G450 since new, going back to 2003. You'll note that lower inventory has generally preceded a recession, including the one that we identified in 2022. But it did not fit the narrative of the NBER. With 354 450s built from 2003 through end of production in 2017, 10% of the available fleet on the market gets our attention. Anything over that is a wake-up call, indicating something drastic is about to happen. What we're seeing in this example is fairly typical of all business jet models over the course of 20 years. As in the case with the G550, the valleys show less inventory prior to a market correction. Now let's take a closer look at ask prices and selling prices during and after run-ups. The first pre-owned G450 sale transacted in January of 2008 with 0 days on the market and brought a premium of near $10 million. As a side note, generally the first sale of any new model will bring a premium, and in this case, it equated to 25% over its cost new. Unfortunately, this happened at the beginning of the run-up and a year prior to the financial crash. But elevated prices continued through 2008, and then came the recession and market correction. By 2009, the markets returned to normal, and that same 2005 year model sold for, dig this, 45% less than it did a year earlier. By 2015, that same 10-year-old aircraft was selling for $15 million, which was falling in line with normal market depreciation. Now let's fast forward to the next price run-up in 2022. Selling prices once again surpassed value due to low inventory, and our 2005 year model was selling for twice its value. 1 year hence, another downward adjustment. Grant you, this is a 2006 year model, but the point being the delta between selling price and value is narrowing again. As mentioned earlier, Inventory is clearly on the rise, and we know this happens after a short-lived market run-up and economic downturn. A couple other data points we use to gauge pre-owned markets is that of historical selling prices via ask prices. And when near-new aircraft come on the market, let's look at opposite ends of the business jet models and take the case of the CJ3+. Of the 15 available aircraft on the market, 6 are 2022 year models and newer. They're practically brand new airplanes. If we look at what a 2023 year model has been selling for over the last 6 months, which is $10.6 million, the ask prices are now coming in below where they were selling, and this is a key to market corrections. Now, in cases where we don't have historical selling price to compare the ask prices, we can in many cases default to the aircraft post value, or ACPV, to determine market direction. In this case, a 2023 G650 comes on the market with an initial ask of $66 million, then a price drop to $59.9 that's very close to the ACPV of $58.3, which again is indicative of a market correction. At the end of the day, and based on the facts presented today, I believe we should all be prepared for a market correction near term. Before we go, I review a fair number of specs for aircraft entering the market, and it never ceases to amaze me what some representatives put in writing as seen here. 1 maglite flashlight wardrobe. How about this? 1 dual DVD CD player 1. 9-seat passenger interior equipped. Aircraft is fresh out of 24-month inspection and it ready to go. For an 800 XP. Asterisk, flexible seller. Really? Currently on a certificate. Always be parked in hangar. Hangar kept in hangar. Oh, here's one. Hand-stitched leather seats configured for conversation. And as of May 2021, there are 174 G650 aircraft in operation. I think it's closer to 447. But anyway, thanks for tuning in. I'm Dennis Rousseau with the Rousseau Report. See you next time.